So before I start talking about future of insurance, I want to take a minute to talk about present. Present, I'm sure that many of us would have already bought a life insurance policy, and you would have gone through process, how the selling and the purchase process, the customer life cycle in the life insurance currently actually works. I'll just take a moment we all have gone through, let's have a look at the end-to-end process, where exactly we are. Then I'll start talking about where we would be heading 5 year, 10 year down the line. So currently, most of us would be earning decently. We have a very structured sources of income. So basically the key term is structured source of income. In case you are asked for a document, you would be able to produce some sort of document that you earn this much. And you would be earning a decent salary, mostly like 4 lakh, 5 lakh plus. So people like us, it's very easy to buy a life insurance policy. We can go to any standard company, to their website, and basically website or through aggregator, Policy-Bazaar, Cover, Fox, these kind of companies, or maybe you would be approached via some kind of agent. It can be a offline agent. And after that, even if nowadays the world is moving towards digital, we are talking about machine learning, AI, data everywhere. So even if we are going for an agent, we would end up filling a digital proposal form only. Now the proposal form which is currently filled, just Google the top life insurance company in India, look at their proposal form. It is highly complex. They ask for all your personal details, and after personal details there would be a long questionnaires, lifestyle, health, and then many other details. Once you end up with 30 minutes in filling a proposal form, and after that you would be required to submit multiple documents, KYC documents. Nowadays, as I said, that we have moved towards digital KYC. So maybe you would not ask for PAN card, Aadhaar card from the backend API. The KYC would be completed. But for income proof, you would be required to submit some kind of document. As I said that as we have moved towards digital, so instead of physical documents, you would be required to submit some kind of PDF upload. Now we are moving towards account aggregator, directly fetching ITR data, etc. So there are companies those who are working in those directions only. But in the end, some sort of proof for your financials are required in case you want to buy a life insurance policy. And after that, in case you have applied for a term insurance plan, then mandatory you have to go for a medical test. Once everything gets completed, then there would be a manual underwriter. Yes, he would be having a system. He would not have to go through all kind of paper documents. We are all digital. All the information would be there before him on his portal. He would be going through everything, and it will take weeks of time to assess a particular application. Turnaround time, on an average across the industry at the moment, it's approximately 4 weeks in case you want to buy a decent size term insurance plan like 50 lakh plus. And after that, after around 4 weeks, sometimes it can be less in case all the documents are in a structured way, but on an average it's around 4 weeks. And after 4 weeks, decision would be taken whether the policy is issued or not. And after a year, we have to renew policy. The contract that we have agreed on at the time of purchase, the same premium has to be paid next year for next 20, 30 years. No change in the premium. Now, what exactly we have experienced, what we are going through at the moment? First of all, insurance is a push product. It's not a pull at all. People need to be educated, aware. I can guarantee that in this group as well, 100% of you would not be having life insurance. Someone has to educate, you have to push some kind of campaign that life insurance is important. That's the reason penetration in India of life insurance, it is extremely less. Only 3 out of 100 people have life insurance policy. Another thing, buying a life insurance policy, there are people, those who want to buy a life insurance policy, but they do not have a very structured sources of income. They do not have any standard document. Think of someone from a Zomato or some kind of delivery person or somebody who is running a kirana shop. He would be earning decent, but he would not be having any structured source of income. He would not be able to produce a document. So that person cannot buy. And then after this, Currently, as I mentioned, that underwriting is mostly manual. There are automations in place, the RPA, OCR we are talking about, but in the end, it is converting PDF upload, those scanned images into a data, and then those data are being read by a manual underwriting person to take a decision. Fraud, we all know about fraud rate in the insurance industry, that is leading to slightly lower claim settlement ratio. And also, since the fraud is quite prevalent, so it also takes time to settle a particular claim. Another major point, as I mentioned, that there is a fixed premium. For next 20 years, we pay the same premium next 20, 30 years till the time we have bought a particular policy, no change in the premium. Now, what is the gap here? Fundamental gap here, the current underwriter, they assess our current state, where we are today, what is the risk as of today. They do not have an ability to assess future risk. A customer would be going for a physical medical test, and based on the risk evaluated by underwriting as of today, premium would be decided. Someone of my age, if he has declared diabetes, other person has also declared diabetes, in case HB1AC in the same range, then the same premium, same loading would be applied, the same premium has to be paid. What about it? It definitely be possible. I may manage my diabetes in a better way. My friend who is colleague, probably some other life situation comes, he is not able to manage in the same way. In that particular situation, the risk for that person 5 year, 10 year down the line is going to be much worse than me. So, in the state of digital data AI, the entire ecosystem of insurance is getting disrupted. It is disrupting in a very fast pace, really very, very fast pace, much faster than we are imagining. I'll talk about how the world would be few years down the line. Don't be surprised, 3 years down the line you would be seeing exactly same word that I'm going to talk about today. Probably today you may feel like probably it will take decade. It may happen just 3 years, 5 years down the line. Now, I would share my view on how the future would look like. Before talking about that, there are 3 major macroeconomic shifts are happening here in India. One is people are getting more health conscious. See, the number of people going for adopting healthy habits and going to gym, going for exercise, it is increasing. Post pandemic, it has increased a lot. Second, age at which people are buying life insurance, that is also coming down. Earlier, most of the people used to think of life insurance when they were getting married, having a responsibility in their late 20s or so. But nowadays, even just out of college, the students are also thinking to buy a life insurance policy. The number of applications from students that we are getting today, it is much higher than we used to get 3 years, 5 years back. The third thing is, that's one of the major shifts which is happening in the entire ecosystem. The boundaries among the stakeholders which are involved across the insurance value chain, which ranges from reinsurer to manufacturer to distributor, that boundary is getting slim, it is getting broken. Now the entire ecosystem, these 3 stakeholders, reinsurer, manufacturer, distributor, they need to coexist. Why? Now reinsurer and manufacturer, they are also getting closer to end customers. Reinsurer and manufacturer, they understand customer need in a much better way than a distributor understand. So they can innovate fast. Many years back, most of the distribution used to happen by distributors only. Like people would go to some kind of distributing channel, they would be buying through that. But now the world has become more digital, the D2C has increased a lot, and now reinsurer would also start pitching into distributing system. Now, these three major macroeconomic shifts combined with the technological advancement that we all are going through, disruption of machine learning, AI, data, combination of all those blockchain, etc. This will bring a major shift in the entire insurance ecosystem. The face of insurance will completely get changed. I missed to add one point here. Insurance is a very wide thing. Life, non-life, travel, motor, home insurance, fire insurance, etc. Since I have a very limited time and I am particularly coming from a life insurance background, so I am talking mainly about life insurance, but most of the things that I am talking about are applicable to non-life as well. Now, let's have a peek into how the future would look like. Self-employed person, somebody who is not having a structured source of income, coming from a tier 3 city, a small town. Today, from a negative pin code area which are completely blocked because fraud rate, we have seen movies like Jamantara and all. So somebody who is buying from a negative pin code area, today that entire pin code, like around 70% of Visakhapatnam city is kind of blocked. So people are not able to buy from the very small areas. The world would open because now would be having ability to assess at the individual level, not at the area or at the pin code level. People from the lower income group having the unstructured income, even they can also assess life insurance. No push at all. People are getting aware really very fast. No need to tell anyone that you need to buy a life insurance policy. As soon as people would start earning, they will understand their responsibility. They themselves would go directly to one of the distributing channel and they will buy a life insurance policy. Next, this insurance is getting commoditized. The distribution is going to be democratized. This means that differentiating factor would not be pricing or claim. For all life insurance policy, pricing is going to be in the same range. Today, how we decide which policy to be bought? We decide based on pricing, we decide based on claim settlement ratio, and third major thing which contributes, that's the brand. Now, both pricing as well as claims is going to be almost same. Differentiating factor would be how good the customer experience is going to be commoditized. People would be able to buy life insurance policy in the same way as we buy a mobile phone. To buy a mobile phone, you can just simply go to Amazon, you can search for a particular mobile model, you can on a click of a button, you can buy a mobile phone. You don't need to submit your KYC document or no document at all, you just make a payment, immediately the confirmation is sent and you receive a mobile phone in next day itself. In the same way, it is going to be commoditized. It is going to be as easy as buying a t-shirt as buying a mobile phone. Next major shift, no long proposal form. Is going to be either no additional proposal form or is going to be very macro proposal form. At the moment, the proposal form which is required to be filled like very lengthy proposal form, it will not exist at all. We will not be needing proposal form. Why do we need a proposal form? We need a proposal form because we need to know the details about that customer so that customer can be assessed. What about in this digital world? Based on unique identifier, we just need to know his some kind of ID or mobile number. And I can crawl the entire digital footprint of that person in the whole web world, and I can scan all those footprint in real time, and on the basis of those data points, I can take my underwriting decision. I don't need to ask my customer to tell his date of birth, education, occupation, lifestyle detail, etc. Lots of information is available about this person in the entire digital world. I can just pull it through multiple external data sources, and on the basis of that, underwriting decision can be taken. So this will completely reduce. The proposal form would completely go away. It will squeeze to one or maximum two field. Based on those two unique identifier, people can get to know enough about that person that will enable them to take the end issuance decision. Third major shift, no documents. World would move towards zero documents. I mean zero document. No document at all. It's going to be on the basis of all digital footprint, decision would be taken. No document doesn't mean that underwriting would not exist. Still, the customer, the end user needs to be assessed on the risk. We need a document so that we can evaluate risk. But if I am able to get enough information about that customer through the digital footprint, which I can directly pull from multiple API, why do I need to ask a document from a customer? Then the manual underwriting, that job would not exist. Operation would not exist. It's going to be zero operation, is going to be zero documentation. The decision would be taken by algorithm only. This is a scalable model. The algorithm would be capable to take even the complex case decision, and the policies can be issued instantly. This would mean that customer would come, the one person, somebody who is not able to buy a life insurance today, who is not eligible to buy a life insurance today, even that kind of person can buy a life insurance very easily through one of the very easy portal. The distribution is going to be democratized just on the basis of filling one or two details, nothing else, instantly policy would be issued. I would repeat, it's going to be as easy as somebody coming from a small town, opening his phone, clicking on an Amazon app, searching for a life insurance policy. The system would recommend, based on all kind of transaction you have left with me, the best offer, the best product is 25 lakh sum assured for next 20 years. Click next, and after that, immediately policy would be issued. No document at all, no long proposal form, no wait time, no manual decisioning. Everything would be done on the basis of algorithms in the age of data and AI. Next major shift. Once we renew policy, we would pay as we live. Today's premium would be decided on the basis of today's health. In case my health is getting better, my premium would go down. In case my health is getting worse, my premium would go up. Wearable data, the continuous flow of data would continuously reiterating the pricing model, continuously evaluating risk, and on the basis of there is going to be dynamic pricing, and based on how the customer's health is going, that price would be revised. So I have already talked about that these are the fundamental changes which would happen in the space of insurance industry. I would talk about, maybe many of us, I'm sure, that would be thinking that this is not going to happen, or maybe this may not happen at all. I am here to tell you this is happening right now. Here in Agon Life, we have already achieved up to a very good extent where we want to be. Now I'll just spend next 2-3 minutes to talk about where we are and how would we bridge the gap to meet the future vision that I just talked about. What I'm going to talk about now, this we are already live with. This we have already built. This is not an idea. This is already implemented. This is already live. We have a very small proposal form. We just need to fill 4 or 5 basic details. After that, some of the IT details, and based on these IT details, we are crawling the entire external data sources. That digital footprint of that person is get crawled. Just on the basis of 5 basic details of that customer, we can pull more than 1,000 attributes about that person. what he has done across the digital world, of course, through consent from that customer, through government and semi-government data sources, through authentic data sources. From that, all data is coming to us in real time. So as customer is completing journey, data has started coming to us. And after that, as he completes journey, as he progresses from one step to other, there are multiple machine learning engine, multiple AI engine which runs in background. So as customer proceeds from one page to other page, the machine learning engine is ready with this decision. In case machine learning engine identifies that this particular person risk is higher or he might be a fraudster, immediately algorithm would take a decision that we should not allow this customer to proceed further. While a fraudster is filling a journey, fraudsters after one or two pages, algorithm would automatically detect and algorithm would not allow that customer to proceed further from that point onwards. And after this, by the time customer has filled his journey, it takes maximum 10 minutes of time to fill a journey. Without any document from that customer, by the time customer completes a journey, algorithms are ready with their decision whether the policy can be issued or rejected. By the time customer completes journey, the policy document would be issued to that customer. This, as I mentioned, that this is not an idea. This we are already live. You all can experience by logging into agonlife.com and trying buying any of the investment or term insurance products. You would be experiencing same. For selected cases, in case somebody has declared, in case somebody is like on the old age segment or somebody has declared some kind of medical adversity also, selected cases may go for a video interview or for a physical medical test, or a selected case in case we couldn't find the enough digital footprint. Only those cases would go for some kind of manual review, but most of the cases in a STP mode, instantly policy would get issued. Now, talking about how exactly this is actually working, what I talked about customer journey, what is happening in the background. The customer is filling a short proposal form. Then as soon as the short proposal form is filled, we have got like 4 or 5 basic detail about that customer. The entire digital footprint of that person is getting scanned. In real time, more than 1,000 attributes from the government and semi-government data sources. Think about any external data source. That data would be coming to us. We have integrated with more than 20-30 APIs, more than 1,000 attributes about that person. This means that I have 5 details, more than 1,000 details about that person would get added. What he has done in last couple of years, all kind of digital footprint, all publicly available through government and semi-government data sources, all that data would come to us. Then there are a bunch of algorithms. This is not a one machine learning engine. There are combination of machine learning engine. As customer progresses, a combination of machine learning engine runs, and in the end, on the spot, KYC is being done. We don't need to ask a KYC document. Based on that PAN card number will hit multiple APIs. KYC would be done on the spot. Financial underwriting would be done. We would be able to evaluate whether that particular sum assured or term, whether we can give it or not. All kind of fraud check, medical underwriting, everything would be done on the spot. And in the end, the decision would be taken. Now, how we are doing all kind of things? This is not a dilution of underwriting. This is on the basis of alternate data. The traditional world works like currently we are working, the underwriting works based on traditional data. I'll take an example. In case we need to evaluate somebody is financially eligible to buy a life insurance or not, as I mentioned earlier, some kind of financial document would be asked. Why do we need a financial document? We need a financial document mainly to check 2 points. A, whether the customer is having ability to pay a premium or not. In case his premium is very high proportion of his monthly intake or so, then the chances of fraud would be higher. Second is higher income group, mortality rate for higher income group, it is less than the lower income group. That's the reason the sum assured the customer is eligible for, this is a direct multiple of customer income. Most of the time this multiple ranges in between 15 to 20. So basically somebody who earns 5 lakh, then 20 times of 5 lakh, in case he is certain age is bracket, he is eligible for about 1 crore or so. These are century old concepts that some actuarial model, underwriting model was thought of decades ago, and these concepts are still being used in the underwriting modeling. This would get replaced in the age of data, machine learning, AI. We don't need to know how much a customer earns. The first thing that we need to know, not his income, but his standard of living. Whether he is having ability to go to a doctor in case he falls sick or not. Somebody who earns 50,000 in a Mumbai city, his standard of living is going to be much worse than the person who is going to earn 50,000 in a tier 2, tier 3 city. So it's not about the absolute income, it's about the standard of living. Thinking on those lines, so we do not need to have a standard income documents. We need to check what is the standard of living of that person. And there, all those alternate data would help us. That what kind of house he is having, what kind of family he is having, what education background he has gone for, in case he owns a shop, what kind of shop he is having, what is the turnover, where exactly he is having shop. Even if a person is having a shop in an area, the shop monthly rent itself is around 20,000 in a month. Just by getting to know that where this shop is placed, I can underwrite that person. I don't need to have an income document from that person. So this is the way this traditional data sources would get replaced from this alternate data. In the same way, on the medical side as well, we don't need to ask a customer to go for a physical medical test. Based on RPPG, and there are multiple technologies also. Based on selfie video, I can extract heartbeat, I can extract breathing rate. So this kind of alternate data would help us. I can connect to wearable devices, and I can get to know how physically active that person is. So moving away completely from the traditional data sources to alternate data to evaluate risk. That's a true disruption. Then another data, quick stream data. What that person is doing on our website. Somebody who is hovering a lot, whether to smoke or not, he is not able to actually decide. Algorithm would be able to detect maybe the decision that he is taken to declare he is a smoker. It might be wrong, because first he has clicked on non-smoker, he moved to smoker again, then he has switched back. So what that person is doing while he is trying to buy a journey, which combined with behavioral analytics, what's the psychology of that person, with what intention it is actually coming from. That's the another layer which would be added on the top of this. Then voice analytics. So basically, when a customer buys a journey, we ask a selfie video. We ask customer to say something based on in what pitch, what tone he is saying, what he is saying. That text it get matched with what he has declared in the proposal form. Video analytics. So based on how old customer looks, what's the biological age of that person. So face of a color color of a face and many other things talks a lot about customer's health. Combined with all the things, so first get the alternate data, it's a data word, then on the top of that algorithms, there are multiple algorithms which would be hosted on the cloud native event-driven architecture, which would be combined with IoT, wearable devices, etc. And then everything would work in sync to take the underwriting decision, and this is the way world would move towards traditional system. The picture that I showed just now, what is happening today, to the picture of future. In the end, I'll just close with one point. We all say that data is a king. Data is not a king. Data scientists are king. Data is going to be present everywhere. All of us, all insurance company, entire BFSI ecosystem would be having the same data sources, access to all data sources. But how we mine that data, how we analyze that data, how we make use of that data, that is going to matter, not having only access to data. With this, I would pause. Thank you so much, and please let me know if there is any question for me. At the moment, for a lower income group, each company has a lower income cutoff. That some company would be having 3 lakh, 2 lakh. In case the person comes that he is not able to prove that he is having income till that particular threshold value, that customer cannot buy. But in this future, the world that we are moving towards, even a lower income group, even if they are having lower standard of living, they can buy. How? Because algorithm would be able to dynamically assess risk, that what is the mortality rate for this particular segment, maybe not at the same price, but is the slightly higher price. At the moment, we do not have a way, technology to assess that particular customer. That's the reason, based on the traditional actuarial modeling, which says that for the lower income group, mortality rate, it is extremely higher. That's the reason most of the insurance company, they do not accept lower income group. As we would be able to access and evaluate that customer based on alternate data, the true risk would be defined, that risk, that additional risk would be adjusted in that price. So insurance would be eligible to everyone, maybe the price would be different. Alright, so there are certain products, like Government of India, they had made a mandate that Saral Jeevan Bima that was launched, that even for a lower income group as well. So you cannot deny insurance based on customer income, education, etc. So up to a certain value, which is like 25 lakh, you need to assess the customer, you cannot deny. But in case you want to buy a higher value, like more than 25 lakh or so, at the moment, many life insurance companies, they do not accept an application from lower income group. But less than 25 lakh, even today people can buy.
New changes in the data privacy bill coming up in India. So how it will impact to the analytics side? You are surely an analytics person. Okay, data privacy will definitely impact to the because you will have to collect limited data, you have to store limited data. With consent, you can use that data also. Okay, how the analytics is future impact in a way, is it going to reduce the limitation to? It will put some limitation to the analytics, or it will, what we are thinking today with new privacy bill, it will look the same way what we are thinking now.
Understood, sir. So I would say, so one thing, what we are currently doing, insurance is a highly regulated industry. Even a small micro step taken by us, it is as per the regulators. With the new privacy and other regulations coming up, we have to be 100% comply with the new regulations as well. All kind of alternate data sources, the scanning and the profile enrichment of that person has to happen under the regulatory guidelines. Now, why a customer would be ready to give consent to access his external data? Because one person is having two options. One is just to click that, okay, I give consent, understanding, yes, making that customer understand that I am going to pull this kind of external data for you. You just click on this. Second option that person is having, you give me your photo, you give me your PAN card copy, you give me your Aadhaar card copy, you give me your last 3 months salary slip, you give me your ITR submission, you have to go for a physical medical test. Which option a person would actually go for? He would go for a first option only. So it's for the easiness, it's for the benefit of the customer. This is not a violation of privacy. This is to make a customer experience easier, customer experience better. Once we pull the data, the customer would be well informed that for how long we would be storing his data, whether it's going to be continuous reading or it's going to be one-time access. Today we are fetching bank account details through account aggregator from customer consent. It's a one-time consent only, that today to take underwriting decision, I have taken a consent. Once you give me a consent, after that I would never ever be able to access your bank accounts. In the same way, by well informing a customer, by well educating that customer, taking the proper consent from that customer under the regulations, this profile enrichment, this alternate data would work for the benefit of customer.
Your financial data and health data, which primarily is for your underwriting. You are not going beyond and understanding the behavioral aspect of a person and how will the person react or act in a particular situation 5 years, 10 years down the line, right? Today we are not taking that data. Now in your AI model, if you are getting access to all those information and you are giving an option that if you want, you can come and renew next year, right? Don't you think there are two dichotomies out there, two different ways? You are analyzing me, my past, my keeping a trend of my future, and then saying I'm going to price you differently next year if you are better. That means you are again going to get into my privacy angle, whether you are getting access to my medical report or whether you are getting access to my behavior on the social media. So why this particular scenario? If you have analyzed me today, that's it. Why do you want to again give me an option next year?
Got it, got it. So this dynamic pricing at the time of renewal, this concept, this is not approved by regulation at the moment. What we are talking about, it's a probable futuristic scenario. What would happen? This would happen from the consent from that customer. The option would be given to customer that either you pay 10,000 rupees every year for next 30 years, or you give me access to your continuous health data, your wearable device like Apple Health, Google Fit, Strava, this kind of data, your medical data from Ayushman Bharat, and this kind of medical data would be actually structured. But you give me continuous access to your data, you would not have to give any document. You will get a dashboard. On that dashboard, on a weekly basis or on a daily basis, on a monthly basis, you can see your health score. And some kind of, it needs to be launched with some kind of products that your health score would improve if you do this kind of things. And with the customer consent, by educating well to customer that if you improve your health score, then your premium would come down. The intention, the idea is to make customer health better. The intention is the well-being of that customer, with the objective to lower his premium next year in case he is able to maintain a better health. This is not a violation of his data. This would happen with all the options given to customer.
So just one question, Sandeep. The underwriting and the actuarial fraternity and the data scientist and the techie fraternity, how do you see the adaptability of your new ideas, new thought, these alternate data as being acceptable by the, because it's a very old traditional type of an industry. So how do you see it and what is the future for it? Because adaptability is the main issue.
That's right.
Yeah.
No, completely agree. You made a very valid point. We also went through this kind of friction, because in case someone says that you would not take underwriting decision, it's the algorithm which would take it. It would not be easily accepted. This kind of idea, this kind of vision, it has to be flown, pushed and advocated from the senior management that analytics and underwriting, these are not two different things. This is one thing. Here in Agon Life, analytics and underwriting, these are not two separate functions. It's the one single function. First, if I talk about 5 years back, there were two separate functions. Analytics responsibility just to analyze data, get some kind of insights and all. Underwriting would take the underwriting decisions. But now these two words have been merged by a conscious decision. This merging in a way that is not a differentiator at all. So it starts in a step by step. First it would be accelerated underwriting, it would be augmented underwriting, that some part would be taken care by algorithm, some part would be manual. Then the decision from that algorithm, it has to be compared with the manual underwriting. The model validation has to be done. After thorough evaluation of those models, slowly that shift happens. But this vision has to be educated from the senior management of that company.
Sandeep, thank you. It was a wonderful presentation. But I have one question. I mean, like the banks and financial sector, they have a credit bureau where we get full details of client behavior, the defaults, and all that.
Yep.
Do you have such a platform where you can collect data of the client's insurance, his behavior, whether he's paying continuously the premium or dropping out after the first premium,
Yep.
or is that the future? I mean, that will come in future.
Yeah, got it. So we do get the previous historical, previous history, that how the insurance history of that person, how he has behaved with the other companies from the India Insurance Bureau. So IIB provides the complete history of that person, which company he has applied for, what premium, what kind of product he has applied for, whether it's an active policy, whether this is inactive policy, whether it's a lapsed one, whether the claim has been made. IIB also scores some kind of risk, whether it's a high risk or low. So this kind of external data from IIB, from the credit bureau, along with many other data sources which I talked about, comes to us in real time. Good question, good question. So basically your question is that whether the lower income group, whether we would be having enough digital footprint to take the algorithm driven decision, right? Answer is maybe. What we would be needing, that from that person probably would not get everything as we would be able to get from a person from a higher income group. But some of the alternate data from that lower income group can also be actually fetched. Somebody, like based on his location, from which lat and long that particular house is, how the location looks like, how's the satellite images looks like, what is the average size of that, average size of houses in that particular area, was the greenery, whether the layout is structured or not. Some kind of value would be decided, that what would be the social economic background of that person. Maybe you would not be able to get the bureau history, credit bureau history, and variable data, etc. We would not be able to enrich his profile in the same way as we would be able to get it from a better profile person, but up to a very good extent, many data sources can be made available. I'm sure that that person would be having mobile phone, how he is interacting on his mobile phone, what kind of application he has installed. On the basis of that behavioral data, on the basis of this decision can be taken.